Well, good morning, everyone. Today is Friday. And boy, what a Friday it is. It's March 6th. It's the end of the first week in March, and we've got a lot to talk about. So I've highlighted the most important parts. I don't want to read this report to you. There's no need for to do it, but let's get into it right now. I hate to say I told you, folks, but I told you the second shoe has not dropped yet, and it's happening right now. World stocks, price of oil dropped sharply again Friday. Pessimism. Central banks are not doing anything yet. Now, here's the problem. Rumors that Chinese officials might be overstating the extent to which local businesses are getting back to work also were undermining confidence. Hey, guys, it's China. They keep things very close to the vest. Look at this. After shutting down most businesses and ordering tens of millions of people to stay home in the most stringent mass quarantine efforts ever, the Chinese government has been gradually urging companies to get back to work. Communist Party officials have long tradition of embellishing on statistics to fit official targets. So again, the news we're getting from China may not be 100% kosher. Keep that in mind. As is often the case, investors are taking refuges in Japanese yen, which has surged against the dollar, and in bonds, pushing prices higher. Very, very true. So again, things are not getting better, and now we're fearing that China, which started all of this, may be undermining their numbers. And as we know, Chinese is a huge part. It's the second biggest economy. And if they're overstating or understating their numbers, it's going to undermine our ability to give a real statistical answer to what is going on. It's kind of like a moving target, but it is what it is. Economic data, employment situation, very robust. This is how good our unemployment numbers were, or employment numbers were, prior to this coronavirus. Unemployment, 3.5%. Jobless claims, 273 instead of 177. Very, very robust. International trade, again, this is data that occurred right before this coronavirus struck the world. Consensus, negative 46.1 billion. We got the actual number at negative 45.3 billion. Again, nothing really to write home about. And I'm going to tell you right now, I would be lying to you if I told you that this is what's driving this market right now. It's not. It's the coronavirus and the impact of it. Now, I'm going to tell you what I was afraid of happening. And unfortunately, it's happening. And I'm going to tell you something. I hate being right. Usually, when I'm wrong, I make a lot more money. Okay, so I'm not a big fan of being right, because that means we're approaching a worst case scenario than I anticipated. Usually when I'm wrong, hey, I love being wrong. I don't mind being wrong because I'll make money when I'm wrong. But when I'm right about something, it could be a problem. Let me show you what I've been afraid of. Let me show you this right here. This is again, I keep going back to this. People are probably already sick of looking at it, but this is momentum levels. This is the percentage of stocks trading above the 200-day moving average for the NASDAQ. This is a chart going back 10 years. This is a long-term chart. This is going back 2010. And I could actually go a little further back if I wanted to and take it all the way back to 2008. So this goes back a long time. So when this thing started, I was telling anyone who would listen and watch my videos that momentum levels the weekly and the daily momentum levels actually got up to 84 percentile. This is monthly. This is very, very high levels right here. But I said markets are going to cool off big time. We're overstretched. And I still believe the coronavirus was the catalyst, the precipitating factor for this. But I believe the market was so tired that it needed to cool off. So the market sold off, and it did exactly as I expected. And the percentage of stocks out of 500 stocks, let me break it down. 500 stocks, 84%. So 420 something stocks, give or take. I don't have a calculator here. Over 400 stocks were trading above the 200-day moving average. We fell off. We went to a point where 20%. In other words, from 420 to like 80 stocks are trading above the 20-day moving average. So that put the S&P 500 in a fairly oversold situation. And I like that. That's good. That's positive. That means the market's starting to come off. But here's the problem. The NASDAQ 100. Look at the NASDAQ 100. This is the same chart. Let's go back 20 years. The NASDAQ 100 went from If you look at the daily, you'll see that the overbought level was gross. It was like 84, 85%. Notice, highest level in 9 months. Let me go 5 years. Second highest level in 5 years. The only time we went above that was in 2018, January. And boy, oh boy, did we come off of that. But notice this time around, we went to the highest momentum levels. Let me increase the chart some more. We went to the highest momentum levels, but we couldn't break. Look at the downside here. Look at most other times. We'd go down to 22% stocks. This is the NASDAQ 100, percentage of stocks trading above the 200-day line. We went to the 25th percentile, means only 25 out of 100 stocks. This is 20 stocks are trading above the 200-day moving average. But look at what happened this time when we fell. We sold off and we only had 43% of stocks. So 60% of stocks, 60 stocks out of 100, because there's only 100 stocks in the NASDAQ 100, were trading above the 200-day moving average. And I was looking at this and I said, hey, something is not right. Because look at the NASDAQ. See, it bottomed out pretty well here, right? 23%, 20%, 24%, 19%, all the way in 2008 to 3%. And I'm not suggesting we're going to go to 3%. But when we look at the NASDAQ, look at this. 19%, 25%, 21%, 29%. But this time around, 43%. And this is the part that got me the most. This was puzzling. The NASDAQ was still trading within the twilight zone, which is between the 50-day moving average and the 200-day moving average, while the S&P 500 was barely able to sit at the 200-day moving average, a lot weaker. Now remember something. The 100 NASDAQ stocks are part of the S&P 500. They're all in there. Those NASDAQ 100 stocks are the strongest stocks of the S&P 500, and the S&P, and they stayed strong. Look, this is the 200-day moving average. We're still above it. Look, this is the downside. We never went below the 200-day moving average. But the S&P 500, we literally broke the 200-day moving average, and we've been sitting below it or on it. So typically, you would see, and here's the kicker, which stocks have a stronger contamination to China? Blue chips or tech stocks, chip stocks? Who makes semiconductors, computers? China, Asia, Korea, Japan, right? We all know this. I'm not opening up America for you. You guys know this. So why is, if the coronavirus is causing all of this, why are tech stocks holding on better than blue chip stocks? Look, utilities, number 2, technology's number 1. Still. That's crazy. Look, technology is still number 1 out of the last on my relative strength scan. And it's been that way for a while. So we're having a coronavirus sell-off, but the NASDAQ momentum levels are holding on while the S&P momentum levels are cooling off. The price on the S&P is falling below the 200-day moving average, where the NASDAQ is still holding on above the 200-day moving average. But the correction is caused by coronavirus, which should impact the NASDAQ stocks a lot more than blue chip stocks. And this is what I've been saying all week. Something is not kosher. Something is not right. This doesn't make any sense. And I'm saying that a second shoe is going to fall. And I think that's happening now. This is the overnight trading action on the NASDAQ. We need to see the NASDAQ bottom out. Now, volatility is really high. Volatility is now higher than we've been in 2011. It's the second highest level we've seen since 2008, which means fear level is really high. But the NASDAQ is still holding on above the 200-day moving average. Now, if the downside was caused by something that was going on in Europe or America, something that was impacting taxes, then this would make sense. But isn't all of this precipitated by the coronavirus? If that's the case, why are stocks that are the most impacted by the coronavirus still holding on substantially better than the S&P 500? From a trading perspective, look, above the 200-day moving average, NASDAQ 100, S&P 500, bearish, below the 200-day moving average. Look at this. I mean, it's right here in front of you. And again, if you're thinking it's because of the capitalization, no, it's not. Look Look, why did we bottom out here at 44%, but 19%, 26%, 21%, 29%? See, the NASDAQ looks like another shoe's going to drop right down here where we drew this circle a week ago. A week ago. Hasn't happened yet. Happened on the S&P. See that? Fairly close. So the bottom line is the worst is not behind us yet. The worst is not behind us yet. We may see it today. We may see it on Monday. But the worst is still ahead of us. Folks, why? Because the stocks that should be the most impacted by this downside have not dropped as much as they should yet. So I'm seeing a lot more downside. Folks, again, it's Friday. I want to give you my strongest stocks in the S&P 500. We got REGN. What a surprise. Pharmaceutical. NVIDIA. Now, why is NVIDIA? They make video cards for computers. Talk about something that's being made in China and Asia. Why is NVIDIA in second place? Why is it holding on so well? Again, PCG, Kroger, Newmont Mining. Why is Advanced Micro Devices on this chart? It's a great stock. It's a strong stock. But AMD, computers, semiconductors, China, Asia, hello. Think about it. Something is not kosher here. But again, I wanted to give you the list of the strongest stocks. REGN, NVIDIA, PCG, KR, that's Kroger. Kroger's a good one right now because people are buying supplies in supermarkets. And Kroger's a big supermarket chain. Newmont, Goldcorp, good stock. Advanced Micro, I don't know why it's still on there. BIBB. Anyhow, if I was going to buy stocks on this list, I would be looking at pharmaceuticals. BIIB, REGN, Kroger. I would be looking at defensive stocks. Guild Science. I wouldn't be looking at semiconductors. But again, why are they still the strongest stocks? Why? If China is causing this, why is NASDAQ outperforming the Dow and the S&P and the New York Stock Exchange if the coronavirus is the cause of this? There's something else going on, or the coronavirus has not had the full impact on the tech and the NASDAQ 100 market. That's the only thing I could think of. But this is an issue, folks, and my job is to point things out for you. But I smell a rat. I'll leave you to your weekend with that note. Bye, folks. If you're liking this, if you're getting something out of it, if you're seeing the market from a different perspective, let me know. Send me an email. I don't bite. Support@marketgeeks.com or like this video and post comments below.